Thanks so much. Welcome, everyone, to the last and final panel of the day, as Sophia says. My name is, we'll try to make it the best, and hopefully it will be the best. Come on. It's all down to the panelists, actually. It's not the moderator, by the way. My name is Szalay. I'm Currencies Correspondent at the Financial Times. And I will be steering these gentlemen along the way today, hopefully.
Yeah, good luck with that.
Forward for it, by the way.
I know, I'm a bit worried. Let's start with a quick round of introductions, please. We're going to start from the other end, from me. A quick intro, who you are, what you do, and how confident are you that the crypto economy is more stable than the non-crypto one?
Sure. Well, Pietro Grassano, I take care of business solutions, that is the business development part of Algorand. Algorand is a layer 1 blockchain protocol founded by Professor Silvio Micali, who's Turing Award, and so on and so forth. I come from the traditional asset management world. I've been spending 20 plus years between JP Morgan Asset Management, BNP Paribas Asset Management. Why am I confident that the crypto economy is going to be more stable than the non-crypto economy? Because without cryptography, all your bank accounts are going to be gone. So a crypto economy needs to exist in order to defend us.
Thank you. Matteo.
So hi. First of all, I want to congratulate everybody for their courage in being between us and cocktails and the very tropical weather here in Switzerland. My name is Matteo Dante Perruccio. I'm President International for Wave Financial. We were the first registered investment advisor in crypto in the United States. We're now an SEC regulated with over asset manager in digital assets, only digital assets. And I use that term, and hopefully we'll get into this subject. I use the word digital assets, not crypto, for a reason. And as I said, we have about over 1 billion in assets, and we're SEC regulated. And I'm looking forward to participating in this. And my answer to your question would be that I was recently at the Milken conferences, if any of you are familiar with those in the US, and there was a lot of finance professionals there talking about their views. And one of the things that struck me was how the system is imploding. It was really evident that there's so much self-interest. People couldn't get away from their own biases in analyzing what is written on the wall, in my humble opinion, about what's happening in terms of inflation and some of the other major problems the economy faces. So I think there's a greater openness in the crypto and digital asset community.
Thank you. Florian?
So Florian Rais, I'm Swiss after two Italians, that happened. I also.
It's not your fault, Florian. Not everybody
I
can
know, and I don't play the Alp horn, if anyone was wondering. So inside
Why?
joke.
We need to know why.
I know. It's a fascinating question. So I'm also coming from the traditional asset management business. I was with Pictet for a while back in the years, and in London for a number of years in private equity, and I was dragged, or it happened that I fell into crypto, whatever we can choose. But what struck me the most, coming from a traditional asset management background, was it was an audience. It was in 2017, it was in Macau, we had the launch of a project, and suddenly surrounded by hundreds and thousands of investors who were intrigued by that. I lived the years of the dot-com and the e-commerce when I started at Pictet, end of 90s and 2000. And back then, what struck me the most is traditional investors wanted to participate. They wanted to understand how they can invest, have their funds, have an exposure, whatever it is, great, small, doesn't matter. And there was nothing. There was no advice, there was no product, there was nothing. So I thought, well, if there's nothing, let's create something that could provide investment funds to whenever this audience will come, whenever this asset class will become one. Because at the end of the day, it's an open source, as they say. So to your question, if it matters, if crypto matters, the thing is, it's an open source. So basically, what does that mean? It means that people will find, or not, a use case, a need, a necessity to invest in it. So if there is no purpose, whatever the asset class is, if there is no purpose, then it's a trend. It's a trend, and then it fades away. If there is a purpose, then it becomes an asset class because there is a need. If there's a need, there's a purpose. Therefore, the economy and the whole system builds on its own. And today, economy, well, as Matteo was saying, we can say that there's a lot of flawed. There's a lot of flaws. There's a lot of problems. And what have we, in many capitalistic economies, what have we built? Bubbles. Financial bubbles here and there. What do we do? What do we have added as a value to people?
So do you think that the crypto economy is more stable than the traditional global economy?
Well, obviously, stability will come at time. But there was one example that struck me the most. And it was coming from the Cardano people who have signed a venture with the government of Ethiopia. And I was wondering, what exactly does that mean? What is that going to bring? And I said, give you one example. There is about 1% of the youth population that have a chance to go to university and have a degree. And then this graduate spend most of his time to convince the future employers that his diploma is real and is not fake. So if you can add this NFT, in fact, unique identity, to prove that your certificate, your diploma, whatever it is real, imagine the positive outcome that this brings to those people. So what I like in it, and why is it sustainable, as not a trend, but as a secular trend, should we say, it's because it matters. And it actually changes the lives and the everyday life of people who have no choice.
Thank you for that.
See, it's already the best. We haven't even started properly.
Imagine if we could play the horn.
We're gonna
I'll practice for next year.
we're gonna cancel the cocktails and just chat instead. Joel, can we come to you?
Sure. Hi, I'm Joel Telpner. I wear a number of hats, but one of the hats I wear is the Chief Legal Officer for Input Output, the company behind that helped build and launch Cardano. So, and we're very proud, by the way, of that project in Ethiopia. It is, to me, a great example of the wonderful things we can do with blockchain technology. Your question, to me, is very interesting because I would come back and say, are you talking about short-term or long-term? Because I spent many years before getting involved in this world, in the world of structured finance and derivatives. And so I think I tell people I went from one wacky area to another wacky area. And one of the commonalities was that we saw how derivatives in structured finance boomed and grew. And then we all remember what happened in 2008. We had this big blow up and meltdown. And one of the things that the world learned from that is perhaps there wasn't enough transparency. Perhaps there wasn't enough standards in how we were doing things. Perhaps there was a little bit too many people playing loose and quick and easy in how they structured derivatives and financial transactions. And so when I look at where we are right now today, it's a fairly thin market. It's not a market that has a lot of transparency. It has sometimes, unfortunately, better, worse, questionable practices around trading and how people manage the space. Now, is that the way it's going to be going forward? Absolutely not. I am convinced that the opportunities, the long term, the future involves, and I don't want to talk about crypto per se, I want to talk about blockchain technology and that cryptocurrencies or tokens, whatever you want to call them, are going to be a fundamental and important part of that. But when we talk about on a long-term basis, the things that blockchain technologies will do, the things that we can do with them, the way we can empower people, the way we can change lives, that is the future. And if we pretend that just because we're having some blips right now in the crypto space, it's all going to go away, it's not going away.
Can I come back with a question? You mentioned derivatives, and I'm curious to get your take on whether you see any similarities between the two spaces.
Well, there were similarities. So there were elements of both then and now where people say, it's really different, radically different, we don't need regulation. Well, that's not true. We learned in the case of derivatives that wasn't true. And quite frankly, the elements or the utopian part of our community that started out by saying it's so radically different we don't need regulation or we can just do it all ourselves, were wrong as well.
But do you still need regulation even though there's a lot more transparency because of blockchain?
Well, but again, we're not there yet. Transparency For example, blockchain allows us to verify certain types of data. It allows us, to prove the veracity of data, to show the origins of data, but that doesn't mean that, for example, when we start talking about the financial aspects of cryptocurrency, or the way that portions of the market use cryptocurrencies as an investment asset class, we don't see necessarily the same transparency as far as trading, as far as where liquidity is coming from, as far as market-making activities, the things that regulated asset classes require, disclosure on, that require standards on. We're just not there yet. We will get there, but we're not there yet.
Yeah, I think you're absolutely right, and I think it's an important distinction that isn't made often enough is when we're talking about the financial instruments, which were often based on the blockchain, right? But many of the instruments are not necessarily the problem. It's the way that they're being traded. It's the regulatory infrastructure or the non-regulatory infrastructure, the self-policing around. So if it brings back to me even before the derivatives was the commodities markets. The way that commodity traders traded before they became highly regulated and highly technologically efficient was insider trading, basically. Was you had a buddy who was in Colombia who told you, hey, you know what, it's time to sell this, coffee. It's time to buy that, coffee, all these things, right? And that's kind of where we are. I think that's maybe too broad of an analogy, but it's kind of where we are.
But people that say that we don't need any regulation at all are wrong. But I think people that say that the same type of regulation that we have for other financial markets would make sense here, they're equally wrong.
And what we have for, just to finish that point, the derivatives market is that, if you're familiar with the ISDA agreement, the ISDA agreement is a papered version of what we're going to have now in terms of blockchain technology, NFT, and able to keep track of transactions and to create trust between the two counterparties.
And yet all these crypto companies are rushing to join ISDA.
Right. But that's, the lawyers always find a way to make
but there's no question that regulations is necessary to bridge the traditional world, the institutional money, let's call it this way, and the crypto digital asset world, which there is a need for if we speak about investment, there is obviously a need to bridge the two worlds. No question about that. What I fear, and I'm not certain of it, of course, but what I fear is there was a fantastic opportunity for the regulators for the past 18 months to actually get together and think about a proper way, an intelligent way to approach crypto regulation. And today, obviously, there has been some events that makes things a bit more shaky. And usually what happens is regulators wait until there is an event like this to push regulations. And regulations that come through in a rush just because suddenly you have the regulators just realize, oh, we need to do something. And they do, and they usually do something that is not very thought through. And that could be a risk.
Come on, Pietro, if you want to add something, please come in.
No, I was just thinking that there is one question, right, which is a pretty radical one, that then represents an answer both to what is this thing from the investor standpoint, and how should regulator look at the thing in order to bridge investors, institutional investors, to the asset class. And it is, what the heck is this blockchain, this thing called blockchain, right? And I think that the actual answer is pretty much related to the ability to represent an infrastructure for the representation of value in the digital age. Full stop. That's what the blockchain is. Right? And then this thing has as well some features related to the incentives of the consensus mechanism that are called cryptocurrencies, which use cryptography that, by the way, has to be used, hopefully, also in centralized infrastructure in the digital age. Otherwise, our bank accounts will be vanished in a matter of seconds.
Pietro,
right?
are you saying that regulators don't understand the technology?
More often than not, this is the case. And this is then a wound, and then probably the answer of going back to basics here of the technology is this represents a wound to the principle of regulating appropriately, as Joel was mentioning, with a logic that doesn't need to be same activity, same rules, but same activity, same risks, same rules. And then, if I can conclude, as an investor, if I can focus on that, I will be able to invest on something fundamental in the technology. Cryptocurrencies can, in my mind, are closer to a warrant on the underlying technology than anything else, right?
I think you're right. I mean, I'm sympathetic to the task that regulators have.
Absolutely.
If I ask people how to regulate a share of stock in a company, we know how to do that. And in fact, capital markets regulations across the planet are fairly consistent. Same goes if I ask you how to regulate commodities like gold. We have a fairly universal standard across the world how things are regulated. Even the same with currency. But the problem is when we start talking about crypto,
currencies are not regulated then.
well, but I mean, we understand at least the frameworks of monetary transactions. But when we start talking about crypto, the real challenge is people forget it's software at the end of the day. And software, because it can be programmable to do whatever we want, which means that no two crypto are necessarily the same. And crypto can have different features and attributes at different stages of the life of that cryptocurrency. It can have different features and attributes depending on who's holding it and why they're holding it and how they're using it. And so regulators have never had to regulate something that can have all of these different features at the same time or at different times. And so I always tell people that when you're thinking about cryptocurrency, it's almost like a chameleon. It really depends on when you're looking at it, why and how. And so trying to regulate that, you have to figure out what that is before you can come up with appropriate regulation. And the one thing I would say is that to the extent that regulators are trying to solve the last problem, trying to impose existing regulatory regimes on this, it's going to fail. Because those existing regulatory regimes were created in an era where this simply did not exist.
Thank you, Matteo.
Yeah, I think there's a couple of points to sort of peel back. I'm pretty sympathetic also to the challenges the regulators have, because I would add a slight edit to what you said when you said more often than not they don't understand the technology. I think they have some very bright people in the regulatory world that do understand the technology of blockchain. They don't understand how it connects with the services to the people that they're supposed to be regulating, so the retail investors or savings clients, and I think that's the problem. And I think part of that is our industry has not been particularly articulate in explaining what the value is, apart from, hey, if you buy this and hold it, you can become a billionaire. And that's not really a great story. It's a great story for some that did become billionaires, but most people that didn't happen to, despite all the press and everything else. So I think that is a real challenge, and I think it's happening, and GBBC plays a huge role in that, in communicating in a more thoughtful and articulate way why this is important. It's an important technology and what it's going to offer to investors. And I would also say that the value that's been created, in this industry to date, and we're really, at the very nascent early days, is astronomical when you think of how long it took the traditional markets to create this kind of value. I think the regulators recognize that, and to your point, they're trying to catch up. And it's such a vast and diverse, we talk about digital assets, you talk about cryptocurrencies, and you have tokens, security tokens, utility tokens, 20,000 different types of blockchains, and new ones being born every day. If you're a regulator, what do you focus on? What part of it? So
what should they focus on, do you think?
Well,
what would
I think
be
what
your...
happens is, inevitably, it's human nature, they focus, to what Florian said correctly, they focus on the pain points, right? So stablecoins are now on everybody's radar because of what happened with Terra, right? Is that really the biggest risk we face in this industry? Probably not, but you can bet that every regulator in the world is examining from top to bottom who's holding stablecoins, what's going on with them, what are the protocols, DeFi. There's probably 20 other priorities right now. But sadly, I guess I would too if I was a regulator, to be fair.
There's one thing that struck me very much, and in the press or in the literature, we kind of try to define this crypto asset class, right? Currencies, commodities, utilities, something else. But at the end of the day, if we summarize, you have companies, they raise money to develop a project, and then they sell some tokens to do this, then it's going to take 5 years to develop it, no surprise there. And then suddenly the tokens goes 1,000 times up, whatever the numbers is, and people say, "Oh my God, look at those, crypto market is crazy, 1,000 times up. I mean, no one has ever seen it." Wrong. Private equity is what? You raise money privately. You do 5 years to develop your product, and then you have the investment banks of this world who are buying the tokens 500x and putting on the market another 2x, so we are back to the 1,000x, and no one blinked an eye. It's normal. Oh, right, yes, this is an IPO. It's fairly valued. But when it is a token, it is outrageous. The label is wrong. In my opinion, investing into tokens, cryptocurrency, whatever, it is actually a listed private equity. The problem with it is it's listed every day. You see the fluctuation of your price every day. Do you see the fluctuation of your price on your private equity holdings? No, because you know that it takes time to build something.
So it actually goes to the title of this panel, the crypto economy. What is the crypto economy? Will we have private equity going forward? Will we have asset managers going forward?
Oh, well, we will. It is now I think it really in the phase where it's accelerating. You have more and more.
But even in the crypto economy, we'll need asset managers or private equity people.
Well, we already have them.
Yeah.
I mean,
we have.
Let me present you.
I'm very offended by that.
Pass on the subscription form.
We're not necessarily good, but we're here. No, but I would say I make an observation is that if you think about how things evolve, right? It's hard for any of us now to remember what it was like when we first came across the internet. Right, and the comments that we made, what it looked like to us, the emotional reaction and connection to it. But I probably said, and many of my friends said, this is crazy, this will never work. And then you started having very visionary people who said, this is the death of the high street, main street shopping behavior. And again, people say, oh, come on, people always want to go into stores. And and I think we saw with COVID how when you have an event, you can accelerate an evolution that was happening anyways. We've seen this development. And the point I'm trying to make is that the internet coexisted with the old economy. And the old economy slowly got smaller and has gotten smaller, and the internet economy has gotten bigger. And we're going to see the exact same thing with crypto and digital assets, and we're going to see the exact same thing with the metaverse. So
you don't think that the sort of traditional system will be wiped out and replaced?
No, but by the way, I'm explaining, not excusing. So don't confuse my visionary prognosis with being in favor of it. I don't really want to see the world go to metaverse, but it's going to. And I can't do anything about it.
But also the thing, when you say, oh, it's going to replace, it's going to replace. That's the word that we can use. And when you look at, the developed countries, G7 countries, whatever, they always says, oh, no one is going to replace our dollar or our euro and whatever. But hang on, that's 20% of the world population. Have access to banks, have access to currencies that are not disappearing overnight, so on. 80% of individuals on this planet, they represent today 50% of the world GDP, including China. Most of them, they don't have access to bank accounts, they don't have access to proper currencies. This is for them. And this is actually the future of a lot of improvement that is happening.
But actually what's interesting what you're saying is you're just demonstrating how different cryptos are, because now you're talking about a portion of cryptocurrencies that are substituting or potentially substituting for fiat currencies. That's very different than some of the other things that you guys are talking about.
You're right.
I don't know. Maybe behind Eva's question, there wasn't the idea of banking the unbanked, but maybe the idea of unbanking the banked, right?
That's great.
Yeah.
No, I mean, the fact that in a way or in the other, it's a disintermediation question, right? If I take it seriously. And the disintermediation question, I think, is a very pertinent one. And it's linked to any stage of the dissemination of innovation. If this thing is real, it is real because it represents value with no double spending by design in the digital age. No more copy-paste. Hey, it's different from what we did in the last 40 years, in which every centralized databases needed an intermediary in between that, of course, was taking a cut. That's what is somehow changing due to this infrastructure that you call crypto economy and rests on few elements of technology: incentives theory, IT, and cryptography, of course. But at the same time, when you have an innovation like the internal combustion engine, is it the death of the drivers? Well, no. It's the fact that the driver need to change from driving a horse chariot to driving an internal combustion engine car. So they need to change a little bit their own techniques, but the function remains. And of course, every intermediation that will prove to be adding value will remain, no doubt.
I agree with you so much, and I think one of the things that we don't talk about...
I told you specifically not to agree with each other.
I know. He's so smart, though.
I know how to play.
We're both Italian, so we were talking before. We say... Now,
those Italians, they're always together.
In all transparency, Florian and Criptonite are actually partners, are Swiss partners for Wave Financial. So, but the idea of expertise, I think, is the bridge. And I think even if we think about something as simple, I go crazy around TripAdvisor, for example. You cannot find a trusted source of a good restaurant when you're traveling, despite the fact there are probably online 1,000 sites that will list, you write in top 10 restaurants of Zurich, and you get TripAdvisor, and all that is democratization of bad taste, in my opinion. So, so lots of people who don't have a very good palate said, go there, it's 5 stars, okay? I also said it was horrible. So I think this is there's a role for expertise to bridge these two worlds, and even more so in the early stages of the development of digital asset industry. And obviously this is a sort of a shameless plug for what we do, but people who have been in it, who are taking a thoughtful, experienced approach, applying some of the experience they gained during the traditional financial evolution and applying it to this new asset class with rigor, I think is what is going to make this coexist in a way that's going to bring out the most benefit for people.
So because we've talked so much about regulation, I just kind of want to close that chapter a bit. What do you think regulators should regulate? The technology? Or the activity? Or what?
The risk.
Yeah, I think they should regulate the risk to start with, because we want to have an asset management activity for everybody. I give one example, in fact, is one of the main problems, in my opinion. This is the first time in financial history that there is an asset class that was born from the retail. First time.
Well, gold as well, surely. I mean, the gold rush.
Gold is so ancient that I agree. I agree with you. But the financial instruments that exist were always born from an institutional level. So you had the hedge funds, whatever the name is, the funds and this and that, and then the institutional money, the pension fund money and this, and then you had the wealthy individuals, the ultra high net worth and this and that. When everybody has really, really used them and made profit out of them, usually what do? They splash it to retail. The retail say, okay, you're free to go, everybody rush in, and that's usually when the market ends.
Says the former asset manager.
So then this time around, there was an idea that come from retail towards institutional, and unfortunately, institutional money there's a flavor of aristocracy of money. Like a CIO of a large institution cannot easily accept that a very good idea is coming from someone that doesn't look like him and was not one of his comrades at MIT or at Harvard. No offense to the school, but there is some kind of things that says, oh no, it's not possible that I've missed it. So there is this. I think we are in this period of time, and I've seen it many times with banks, we talk to, and you can see that there is the investment office. There is this kind of thinking process, and say, how can I get senses of, I was saying to all my clients and partners for 3 years that this must be a Ponzi scheme. How can I now say that, you know what, it's probably an asset class and you have to address it properly?
But I disagree.
You see?
So look, I'm not saying you shouldn't look at risk. Of course we should look at risk, but I think once you start to go down that road, we're in effect saying, and maybe you didn't mean to, but we're in effect saying these are all financial assets. And I think that once we go down that road, now we start to forget about all the reasons that cryptocurrencies exist, all the use cases for blockchain. And so I think you have to think about it from use cases as well. So to extent that there are portions of the crypto market that are purely being used for investment purposes and financial assets, then yes, look at risk and think about the extent to which those financial assets should be regulated in a manner that may be similar to how we've regulated other financial asset classes. But if you're looking, for example, at cryptocurrencies, like you mentioned Ethiopia. So if you're looking at cryptocurrencies that facilitate the ability to create identity and control identity, now you want to think about regulating things like privacy and how do we control what government information can, what governments can access, what they can't. And so now that's a completely different way to think about regulation than simply financial risk. And so I always caution people not to lump everything in one bucket, because I don't think it helps us as an industry. I don't think and we forget about all of the other things we can do with blockchain technology.
I think you're right if we conceive risk just as financial risk, while privacy has data mismanagement risks and so on. So if we take, exactly. If we take risk as an overall overarching category, I think that be it for financial risk, for market integrity, privacy, avoidance of big data platforms that alienate our data and become rich without us even knowing, right? These are all risks that maybe different regulators, right, should have a look at, as they are, or they should have a look at today already.
I'm very excited because I agree and disagree.
So fight with yourself.
I agree with much of what was said about.
You really become
I
Swiss,
disagree fundamentally with this concept
such a
of
sellout.
risk. And I'll give you an example. Terra, right? Terra, algorithmic stablecoin. Okay, what's the risk? What's the risk? How different is it from a CTA? For those of you that are familiar with systematic hedge funds, systematic hedge funds are not regulated differently from other hedge funds. They're regulated under a regime that looks at the rigor and the compliance of their investment process, who is licensed to do what they're doing within the firm and overseeing it. So I think we fall down a little bit of a rabbit hole by trying to regulate the instruments all the time, and we should think about who's providing those instruments. So if it is a financial instrument, why is it so hard for us to say, if you're going to supply stablecoins, these are the things that you have to have this type of compliance officer with this type of background, this kind of legislation around the firm. I don't think we should be getting into, is their algorithm sound or not? Because at that point, the investor chooses whether they like that one, like, do I like JP Morgan Asset Management because they're big and they have lots of stuff, or do I like this boutique one who has all the same regulatory obligations that JP Morgan Asset Management has? So that's where I disagree slightly about how we should think about it.
And it's a matter of labels as well. Stablecoin actually means nothing.
Right.
Okay,
Right.
so
We're really good as an industry creating labels that don't necessarily mean anything.
So at this point, I think we might open the floor to questions. Anyone has any burning questions that we haven't yet answered? We have a question at the back. We have a question in the front. No.
Good.
You said experts' opinions are needed for giving good financial overview. And how would you describe the asset manager 3.0 maybe? And which kind of key challenges do you see like today, right now, and in the next 3 years, besides regulation and maybe the terror?
I think this is asset management 3.0. This is it.
I want
This
to
is
go on
it.
record to say that we did not plant this question. It's just too perfect for me to answer. but it wasn't planted. No, I think I like the fact that you differentiated between what's needed today and what's going to be needed in the future. Because I think today it's paramount. Again, I use the analogy of the early days of various financial instruments like commodities and so on. I think community deep in the ecosystem is probably one of the most important characters. Having experience, for example, I'll use Wave as an example, and it's just a real life example. We were very early in the crypto and digital asset derivative space. Being a player in that, you make connections, you understand the ecosystem in a way that's different than someone who decides, who may be incredibly literate in derivatives, but joins the crypto community and says, I want to trade crypto derivatives, because you learn to understand signs and when the earth is shaking, but it's not obvious something's happening. And in fact, for example, we got out of Terra. We had Terra like everybody, but we got out very, very, very early because of that sense that there was something not right by pricing in the marketplace, what was being said, communication. So I think right now Paramount is experiencing and operating in this sort of, bridged phase of the Wild West meeting, TradFi. As it goes forward, I think it'll be more infrastructure, systems, the marriage between AI and human interaction, certainly on DeFi and having algorithms that'll help you trade and things like that. And I think it'll look very different than it does it, and probably the human component, like most of the things we're living in the world today, is going to be less important over time. I hope not.
But I think one thing as well in terms of expertise or banks and asset managers and all this, if I make a parallel with technology 20 years back, I mean, the banks had to move from a stage where there was no expertise in technology, and so they had to build in-house expertise. But at this moment, you could go, I mean, Goldman was going to MIT and was offering nice jobs for those bright engineers to offer a banking career and saying you're going to work at Goldman's in New York or whatever. And there was an appeal for this. Maybe it will change, I don't know. But if we take State of the Union now, I don't see that many of the know-how that is really inside this community. Nobody really has a dream to go to work for a large financial institution as it was 20 years back. And what I'm saying by this is there's going to be a transition, which is great, I think, for outfit that takes this business seriously, in saying, you know what, don't wait until you build your in-house team, because it's going to take too much time, and you are going to let your clients face risk, because they're going to have to do pretty much what they want themselves. So I think there's a transition that needs to be done, and this is pretty much why we try to exist.
Any more questions? I think we're getting perilously close to the cocktail hour. So just one last question, please, to draw a line under the panel. What is your sort of biggest forecast for the next 5 years? What will be the biggest crypto economy related event, do you think? Joel, shall we start with you?
Sure. So I think that especially if we look at other cycles, we go through ups and downs. All new technologies, including what we're doing now, they have ups and downs. The benefits of some of these cycles are that a lot of the noise gets pushed away. Some of the projects that never should have been there go away. And what rises, I think, are really, we start to see the valid use cases. So I think we're at a turning point now where we're now going to start to see over the next 5 years how people are really thinking about seriously how blockchain can change the way we do financial services, the way we start to control our identities, the way we do things like better manage even boring things like supply chains. So as we start to see the realities of blockchain, that will even put the crypto part of the market in better perspective. And so we're in a very noisy period right now, but what it looks like in 5 years, I think, is going to be to start really, finally, once for all, proving all these things that we can do with blockchain.
Thank you. Florian?
So, well, in 5 years' time, I think that if we look at the States today, everybody worries about, inflation, prices, economy is too big, there's no enough demand, there's not enough this and not enough that. I'm a strong believer that the next wave or the next phase will be from emerging markets, as we consider emerging markets. And today, there is an amazing chance for those economies to be finally rising at a fast pace and on their own. What struck me is, in the 90s when I was at Pictet, we had a large emerging market fund, and one of the fund manager was explaining to me that to invest in shares in an Egyptian company, he had to make money transfer, take the cash, go to the stock exchange, bring back the physical paper to book it into the account. And I was like, my goodness, how complicated is that? Just to have some equities being purchased, right? And then you had the economies were linked together, so the flow of money was made easy. And what happened? A lot of money flew into the emerging economies, and it was a big boost for those economies to happen. What I think we definitely will see and I really hope it will. And Cardano, as an example, has this focus in Africa, and is greatly needed. And I think this is something that we will see, because you will have this pattern of, I give you the tool, you have the ideas, you have the youth, you have the energy, you have the everything. I give you the tool for you to develop yourself by yourself. And then this is the first time in history, in my opinion, that we can actually allow people to grow and be their own economy and not depend only on the goodwill of the most fortunate.
As President Mao used to say, I prefer giving the fishing stick than the fish to people. So we understand your reference point. So, President Mao. Good.
Thank you.
So really quickly, I think there's two very separate paths that we have to think about. One is related to what you were talking about, which is the whole blockchain ecosystem and how that is going to change the world, and that's such a subject for such a large conversation about if we just think the singular just shipping industry alone, if that adopts fully a digitalized NFT-based and blockchain-based system, what the implication would be for the world and that education, financial, and then there's the financial side of it. And there I would caution our industry to be careful what we wish for, because we're always dreaming for institutional money, and institutional money is greedy, and it's self-interested, and it is at odds fundamentally with the concept of democratization of finance. So what we're seeing right now are some of the signs of institutional money, and some would argue Terra was the first sort of inklings of that. But what you see is correlations going up, things when more money pours into a system that's young like this. So I do think I would like to see the institutionalization of this industry, but I'm not sure I want to see it all happen at once, because I think it could be a very complicated period. But that's what we're going to see. We're going to see lots more money come into this, because there's money to be made. And when there's money to be made, the institutions follow eventually.
Very true. Some last thoughts?
Yeah, I will make a less ambitious prediction for the future, which is I think that the asset management industry will realize that tokenization and the use of blockchain infrastructure can save a lot of money when it comes to cross-border payment system and to custody. These are two elements in the cost base of an asset manager whose skills in deploying capital needs to be increased, fostered, priced in, rewarded, name the way you want. So there is the role for an asset manager in terms of deploying capital. But then please use the most efficient infrastructure to do it.
So I think your prediction is that asset management will become cheaper?
Well, it could pass down some scale benefits. Yeah, sure.
We hope so.
It could, listen, I mean, that's the story of the last 15 years, right? When rates go down, fixed income are a way to lose money in real terms, right? And equities are underperforming vis-a-vis the logics of index funds. Well, okay, you have to look at the infrastructure and try to find ways to pass down the scale economies.
But if you look at cheaper in currency,
I'm telling you, cocktails are cancelled.
But in currency market, look at today you can exchange currencies with what, 1 pips, euro dollar, even 0 sometimes, or you can go to a bank that will charge a hefty fee for it. I'm not saying that 1 pips is cheap, and I don't. But there is margin for things to cut intermediaries. And absolutely, there is no reason why we as clients and as managers, why there's no free lunch. We try to provide products that make sense. If you make a product that makes sense, people buy it. If you make a product that doesn't make sense, no one buys it, and you have to find something else. So yes, it becomes cheaper and hopefully more effective.
And on this jolly note, I think we will draw to a close. Thank you so much for listening.
Yep.
Florian's going to play the Alpenhorn after if you want to hear him.
Wonderful. Thank you.